Hey guys, it's Paul with the Ugly Motel. So we're going through a mini series on how to buy a hotel. We started off first with how to actually find a deal. Now we're gonna be talking about how to kind of analyze that deal, analyze its cash flow, and see if the numbers work out for you. If you do something different, if you have a different way of coming up with these numbers, leave a comment down below. We would all love to learn from you and just see how other people are doing it, because my way's not the best. I'm gonna just be basically going through a calculator showing you how to plug it in. You can find this calculator at theuglymotel.com. I currently have somebody from Fiverr uploading the calculator that they built for me. I'm not exactly tech savvy when it comes to website background design. I can throw in some HTML. If you're interested though, check out my Fiverr link down below. I think we're paying maybe $50 for somebody just to upload the calculator. It's not a bad deal. We're getting really close to our 1,000 subscriber and 4,000 watch hour mark to be monetized. If you haven't already subscribed, please do so. If you've been meaning to do a binge watch of The Ugly Motel, now would be the time to do it so I get that 4,000 watch hours. Just adding extra cash flow stream really helps us get along and helps the channel grow and lets me know that you guys are interested in this information. If you guys want to learn how to do the actual finance side about it, stick around, be sure to subscribe, press the notification bell. We'll be doing a video on how we are securing financing for this deal in the next episode, whether or not I actually get the deal. So let's get started. One more thing, when we do actually have the big hotel in Lincoln open, I'm more than fine sharing these numbers on a monthly basis if anyone actually cares. It's kind of fun seeing where you're at, seeing how much money you make in a month. But then what people don't think about is how much money you spend in a month. These actually look really similar to the numbers that I had when I first bought the hotel in Lincoln, which, let me tell you, this hotel has a lot less rooms. So my hotel in Lincoln has 155 rooms. This one has 17. So to have these kind of numbers is insane with that few of rooms. The age of the property makes a big difference too. This one was built 10 years ago. So if you didn't hear the piece of golden advice I said in the last episode, it was buy the new hotel because everybody likes the shiniest, latest, greatest, right? It's the easiest thing to maintain if you want to keep collecting them and if you want to focus on hospitality rather than trying to maintain a property. Lincoln, Nebraska has a lot more traffic going through it. And this one is located somewhere that does not have as much traffic going through it. With that said, these are amazing numbers for a hotel with so few doors, right? My thought here from the last year is I need to move out of the bigger cities, need to get some smaller eggs in the basket so all my net worth is not, in one giant egg. Ben Franklin said, put all your eggs in one basket, then watch that basket like a hawk. I've always had all my properties in Lincoln. Well, I had one in Seattle and one in Columbus and one in Seward at one point. But lately, all my properties are in Lincoln. And I'm starting to think that is not the way to go. Because if you have one insane increase in tax, or if you have just one complete policy change, it just kind of messes everything up. So let's look at some of these numbers. This is in 2021, so this year, they're doing $25,000 a month off 17 rooms. That's pretty awesome. Now, these guys said that they were somewhere close to 60-70% occupancy rate, which they'd have to be. Another thing that they have, which a lot of hotels have gone towards this year, their ADR is pretty high. I think that they're at about $99 a night, which, again, with the no eviction ban or whatever, you can't really afford to do the lower end rates. Let's face it, if I wasn't traveling with my wife, I don't really care where I stay. I need a bed, So a lot of us guys, a lot of contractors are like, I just need a place to stay. So it's making it harder on us, the ones that usually have the blue collar type stuff. But it also means you don't have the risk of somebody squatting and not leaving, It really makes contracts so much more important this year. And I think going forward, it's just going to be the new norm. So let's look at what they're doing. $25,000 a month off 17 doors. They only pay themselves $1,000, which you'll find. So we pay ourselves $0. I don't know how much my CPA actually wants me to go into this, but I believe in putting all the money back into the business and then let the business buy more businesses. It could pay for my truck. It could pay for other things like that. Sure. But if you're an investor, or if you're, I think I'm 32, 33. Am I 33?
Yeah.
I'm 33. If you're at this point, you don't need to be collecting a bunch of cash and putting it inside of a basket, just keep buying vehicles that are going to make money for you. So right off the bat, you can see that wages are about 25% of total income. Industry standards about 30%. So it's about where it should be. So I don't really think there's anything here in the expenses that we really need to worry about trying to cut back on. I think that big issue is income, which is weird to say because this hotel is making such great income off of so few rooms. But when I started looking into the property, there's just so much potential that has not been actualized yet. So remember in the last video, I said, let's do a SWOT analysis on whatever property. So some things I really like about this particular motel, there's only one other hotel motel like within driving distance of the town. It has a lot of potential to grow the town itself. Another thing with this property though, it's not online. It's not currently using any of the third-party market stuff, and has a website, and it says call us, and there's the phone number, and that's kind of their PMS software. That's kind of the extent of what they're using so far. So, and it's worked. Look at their numbers. It's working great. They don't have a necessary need to improve it, but I think that there's a lot of room for improvement. All right, so let me show you my calculator. So this particular property, I'm trying to buy for $900,000 down, or $900,000, okay? That's a little bit less than what they're asking. In my opinion, it's a little bit more than what the property might be worth. One, for the size of the hotel, two, the size of the town, and the average property value, the real property value of the building and the land. But there's just so much blue sky, and the business itself has a very strong value. So I always try to do zero down as far as my actual cash invested. I don't know if this one will be possible. Maybe we'll end up working something out that ends up working. I don't know if you remember in my last video, I talked about how I bought 2 properties. I intended to refinance them at some point. I got them because they had great cash flow opportunities, and I'm still trying to find long-term housing for people that used to stay at my hotel that are still kind of struggling with the pandemic. We're probably going to use the extra equity in those 2 properties, throw those into the loan, pull out that cash, use that as our down payment, and figure out something smart for the other half of it. So, but let's just say that I'm gonna borrow 100% of it. Okay, market rate 4%. That puts my monthly payment interest at about about $5,000 a month. Okay, so one thing I need to change here is I put it on a 25-year loan. I wasn't sure if that was something that was going to be a possibility with this particular loan. I did hear back from the banker today, and they said, no, we'd like a 20-year. If we're giving you money, we call the shots. And that is what I expected. But, you know, it never hurts to ask for the moon. So we'll just have to take out 5 years. So is that right? Yeah. Okay. And then we'll calculate. I'll view report. So yeah, about that 5,500 mark. Doesn't break anything, especially because I feel there's some other really, really strong benefits to this property. Because it's not located in Lincoln or Omaha, might not be in Nebraska, I don't know. The taxes are not going to be as insane. For older hotels, or even just, you know, people that aren't coming in with 300 rooms and like a Marriott flag, you know, taxes are a big deal. Personally, I'd rather not have to fear that my taxes are going to double in a year like they did in Lincoln. I need to figure out a better way to protest that. I did protest this last year. They said, no, you've improved so much. And okay, for my property description, I don't feel $150,000 for 2 acres on the highway is insane. A lot of potential to grow it. I did talk to Wyndham about possibly putting a flag on it. They're like 17's a little small. Let's talk about what we can do to build it a little bit bigger, maybe put a banquet hall or something else the city would actually need, maybe get some TIF money. There's that. And then the building itself, 10-year-old building. I love the way the guy designed it. Everything's tankless water heater. Everything is easily accessible. Everything is 100% easy for the repairman, which I'm guessing was him. So, in fact, I know it was him. So for me, somebody that ends up doing a lot of my own repairs, if it's a simple, quick thing anyway, or I like to know my systems at least, you know, again, former submariner, I need to know what's going on. One thing I don't care for, he didn't do, RFID door locks or whatever, we can live with that. All right, let's check out some other stuff. So the property currently has potential to do 620. That's again, using his numbers from that. And then if you notice, he also had some other income. He has, I think, vending machines or something on the property. Oh, it rents out that other acre for a festival that happens. So there's other income that, again, I call my fun money. I get billboard income, washer and dryer income, vending machine income. I have a small little arcade, some small rental things that I do. I don't really include it as my actual income. I don't even think of it in terms of like on there. I'm sure my CPA does, whatever. But for me, it's not worth counting on, It's all just extra. It's all fun stuff. And yeah, so I took his money that he made and I assumed a 50% vacancy, right? Or 50% occupancy, which is extremely conservative for a motel hotel period. And this guy is doing great as far as selling rooms. And I think once he's online, it'll go even higher. But this is at his current rate. If he doesn't increase rates, which he was talking about, they probably need to come up another $10, $20. They haven't raised in a very long time. I think conservatively, it's going to bring in enough cash. We'll probably see this number. We'll probably see this closer to 400 in a couple of years, maybe even 500. Our hotel in 2020 was looking at hitting close to $750,000 if the city didn't come to help us. So I mean, things grow, and the debt. No offense to the federal government, I think we're going to end up seeing that interest rate of 4%. It's going to be a joke because I think we're going to be seeing 6% for a little bit. Again, random guy on YouTube. Calculator also breaks out the expenses. Again, if you want to see how to put this stuff in there, it literally is just you can guesstimate. I like to go back and forth and see how things move, but usually just type in your numbers here. If you'll notice in my expenses, I broke out the things that made sense, and then I took the difference. So I said, okay, how much expenses did we actually account for minus his total expenses, and I put that in miscellaneous. At the end of the day, this is a calculator. I'm showing you how to use a calculator, okay, with a lot of commentary in the background of how I saw or used or whatever came across this deal. So personal finance tells us that if net cash flow is positive, then you buy the deal. If it doesn't, then you don't. But you have to figure out what your actual tolerance is. Usually, I mean, for a property, you're hoping to bring in, at least an additional $10,000 a month or a year. Sorry, if we're looking at how much we're actually going to be bringing in at the end of the day, after changing our note from 25 to 20, we're still bringing in an extra $25,000 a year. So is it worth the extra $25,000 for the headache of buying a property, now having to manage another business, do all that stuff? In this particular case, I'd say yes, because that $25,000, I don't think that's going to be all we're going to do. I 100% believe in our ability to market it. I think the internet in general being added to this property will increase sales. I love the fact that this property is not dependent on tourist income, because currently one of the issues that a lot of hotels are dealing with is they have to have tourism return for them to be able to get back to normal. And this particular hotel motel does not. And it also has a lot of potential for growth. So $25,000 on the worst side, in the worst case scenario, if I just operate it as is, hey, that's not bad. So basically anything I can increase it above that $25,000 a month right now is pure profit. So if we could hit that $50,000 a month, if we just stay occupied 100%, one, that's nice, but also two, it says, look, we need to grow. We need to invest in more space. We need to get more rooms. We need to develop this area. I like this investment.